Hey, Wall Street winners. It is Tuesday, March the 12th, and it's 11 a.m. Eastern. So apologize for the lack of a pre-market recording today. But what we can see with the markets now being open for an hour and a half and CPI coming in hotter than expected is the markets have kind of done probably the opposite of what many people thought they would do with a hotter CPI print, meaning that inflation still exists and getting back down to 2% is taking a lot more work than the Fed had thought or others had thought, which means that interest rate cuts are probably going to be extended or delayed, if you will, in terms of when they occur. So what we can see is you've got the Dow up 250 points. The S&P 500 is up 48. If we cruise over to crude's up 40 cents, although it did drop below its open in the last hour. And then you have the NASDAQ up almost 200 points at 191. So what's happening today? Retail seems to be on a bit of a tear. You can see these big retailers like Dollar General, Walmart, Home Depot, Alimentation Couchard, I don't know how to pronounce that, I'll call it ATD. It's up, Nike is up, and then healthcare is off for the most part, although HCA, Healthcare of America, is up. Transport is up, and for no particular reason other than the economy seems to be strong and earnings are coming in better than expected in most cases. We saw Oracle popped probably $13-ish this morning and is up about the same thanks to strong earnings. It's had 2 quarters of bad earnings. So if we stick with Oracle for a minute, here's a great example of if a company has 2 quarters of bad earnings in a row, it's in a sector that's on the rise, like tech, it's highly unlikely it's less likely, it's not highly unlikely, it's less likely that it will have 3 bad quarters in a row, especially in the case of Oracle, which is one of the Goliaths in the space. And so it produced and shared better than expected earnings, beat the street's estimate on earnings, and it really popped after market and into the open today, which is the following day. So that would have been an interesting opportunity for a pre-earnings purchase. When you're kind of on the fence about earnings and a company's been having good earnings, but it's questionable as to whether this quarter will be good earnings, that might be a good time to dial back. Not say sell all of your holdings in that, but maybe sell 25, 50, 75%. Certainly sell it all if you think earnings are going to be terrible and the stock's going to tank. But if you're on the fence at all, it's not a bad idea to hedge your bets. Keep a little bit of money in your account and in the position, but take your profits as well, because I think it's pretty evident if you've been following my channel since the start of the year when I've really started posting videos that stocks don't continually go up. So if you haven't learned that lesson yet, that's the lesson of the day. Stocks will go up on rumors oftentimes, and then they'll often correct on news. Now, in the case of earnings, they'll often go up on news and earnings releases, but then a few days later, they'll usually retreat a little bit. And we've seen that time and time again. I mean, earlier in the earnings season, we saw that with ARM. We've seen that with Consolidated Edison. We've seen it with Valero. I mean, it's an extensive list of areas that we've seen it with. If we get down into oil, so crude's kind of been dropping the last few days, although it's up today, but it's not up significantly above where it was in the last week or so. So if we look at crude here and we look at the 5-day, you can see that it still hasn't gotten back up to 78.93. It's still 41 cents below that. So oil stocks are doing well today. I mean, most of them here are in the green, but crude itself is hovering in that mid 78 range. Things that I'm really avoiding at this point. So I've had some Enbridge. I've sold out of Enbridge. I think that you're probably nearing a peak in the high 48s to the 50 range. I've taken some profits on Consolidated Edison I bought it when it was down in the high 85s, and I've gotten rid of that position. I don't think there's a great deal of opportunity for movement to the upside here in the near term. I've been out of Valero for the last week or so, and it's been fluctuating about $1.50 either way. So if it does drop, I mean, I think it's a good opportunity to get back in. But I have been in more tech stocks lately than oil stocks as oil has appreciated. One of the ones that I've bought on a dip was Palo Alto, which is in the cybersecurity and networking space. I think it has a lot of potential there. It had a bad earnings announcement in the quarter and dropped, I think, close to $100, like in the $90 range. So it became much more attractive and affordable in the $280, $270 range. And then if we look at Microsoft, I've been in and out of that. I sold some Microsoft today as it peaked. I've been avoiding ARM, but ARM's getting back into the buy range for me. So I think if ARM drops down below 120 and into the teens, I think I would consider picking that up, specifically based on how the narrative is now shifting again with semiconductors. And they're talking now about the fact that with future earnings growth, these things aren't priced in a ridiculous fashion, even with price to earnings multiples being high. AMD is on a bit of a tear today, as is NVDA. I mean, NVIDIA, we saw, and I posted yesterday, that it would be an attractive or a potentially attractive purchase when it dropped into the mid 800 range or the 870s. And today it's up $45, $43, $44 above 900 again. So again, I'm not suggesting you want to get in at this point, but if that does pull back again, or if it continues on the upside, it could be an attractive addition to your portfolio. Google is climbed from where I'd suggested getting in the mid 130s this week or late last week. It's almost at, well, it's at 139, probably heading into the low 140s. Adobe announces on Thursday after market close. It's been climbing significantly towards that earnings announcement. I think this is still a solid purchase because I think we're going to see this into the mid 600s or at least 620 to 650 range in the next couple of weeks. And then we go down to financials. I do still think SoFi at the 750 range is an attractive buy, but I'm really staying out of some of the others, even though we are seeing some upside in financials today. I think there's still some risk there, and I'm going to hold off on these until we get closer to the end of the first week of April. As they roll into the second week of April, or first and second week, when we get back into earnings season for the financials, I'll start to dip my toe back in the water in the financial space. So that's where we are today. I'm wishing you all the best in your trades and hoping you're making money. If you have any comments, post them in the channel. Happy to address any questions or comments you have. And if you haven't already, subscribe to the channel. Thanks.